Hi, this is Matt with PriceActionTradingSystem.com, and today is Tuesday, July the 31st, last day of the month. Um, Hoping everybody had a good trading month. If you didn't, maybe this will be August to be a better trading month. Getting close to school coming back. We're getting back into the fall, so a lot of traders are going to be coming back to the market, wrapping up their vacations and so forth over the next few weeks. So it should get interesting. Hopefully we'll start to get a little more movement and better chance to catch a bigger trend. But let's look at today's data, and it looked like it was going to be another trading range day, but in the end it really just turned out to be a lazy kind of weak downtrend, and this is a kind of a down channel, and this is what kind of threw me off here when we broke a little bit higher here, made this new low, and then came back up in here. So I'm thinking, hey, we're either going to have a trading range or we're going to trade higher. But this trend channel held again, and we went down, and of course we tested the low side. So it's very rare that you will drop down here like this and not test this channel line. So it was a little bit deceiving, and that's why you got to, even me with my experience and all the hours I have watching this, it tricked me a little bit today. And I just kind of stayed out in here. When you don't know what's going on and you're lost, the best thing to do, and it's a good example. I'm kind of glad I brought that up because I got lost right in here. So what did I do? I just kind of stayed out until we had a setup right here, and I didn't trade. And that's the best thing to do, is just kind of stay. If you're not sure what's going on, then don't take any chances and don't gamble with your money, because if you can't read the price action, you can't see what's happening, then you're just gambling if you enter a trade. And we don't want to be gamblers. We want to be traders. And as a trader, particularly a profitable trader, you're only entering when the odds are on your side, and that's going to be at the key entry points. And where are the key entry points? If you hadn't heard me say this before, you got to be new or you're not listening, because the key entry points are the strong support and resistance areas. That's these areas. And these slanted trend lines, because that's all these are strong support and resistance lines that are angled rather than flat or parallel like these, or horizontal, I guess you should say. So make sure, if you don't get anything else before you learn anything, is that you understand that the key entry points are always going to be at strong resistance, strong support, and those are either these flat horizontal lines or these angled trend lines. And these angled trend lines are just as powerful as these horizontal flat lines, with the exception that they're just angled. That's the only difference. They still have the same authority, and they hold just as well as the flat ones. And you can see that in this channel. That channel ought to be very clear to you, to anybody that's looking at this. You can see it held prices, and I drew it off these first couple of swings here, and I really was not certain that I had it here, because we kept turning down earlier. But when we didn't go lower and we kept going over, you see, sometimes that's what will happen. Prices cannot really sell off because we have this strong support, so they just range until they finally get to the strong support or resistance area, and then they take off again. And that's what was happening here. And this first trade was really obvious, because, and to show you where this support was, this is the same support from yesterday afternoon, or from yesterday really, the whole day, and definitely from yesterday afternoon. And that's exactly where we bounced today. And you can see this, this was really way down here, and that's exactly where the lows were for that. But at the time, the closes were, for the overnight, were all right in here and right across here. So I kind of drew mine like that to start, and that turned out to be a great place to get started. We'll get to that in a minute. Let's start over here with trade one. But we had a little double top right across here. Actually, your line would have been right there at this point, because that's the last swing high. And so when prices bounce down here, we were looking for prices to come back and test this, and that's where we turned right there. And this is a great trap, because we had this nice move up, and then we went into this. Hopefully you can see this. Look at all that overlap, all these overlapping bars and so forth. Prices broke higher and immediately found resistance at this high and then turned down. And generally, your best ones, you can tell by the stems. You can see all these stems in here. You can see the stems that tend to grow at the top up here at all the highs. And when you get in a turn, you tend to start getting stems, and you'll get prices were coming down in here, but nothing could close in here. That's a bullish sign, especially when you get a little double bottom in that one tick right there that ticks lower and creates that lower double bottom. That's a good sign, and then prices closed up here, so the buyers were gaining strength. There was a lot of buying going on down here, so there really was an entry here, but it was right before the market opened, and so it was better to wait and let the market get to moving and figure out what was going to happen, because there was a lot of overlap there, and there was a chance this could pull up here to the EMA and then turn back down. So it was better to wait, and you got your nice chance to go short right up here. And this is a second entry short. There's a couple of legs up, and then a second entry short, and it was a fairly simple move back down to the other side, and you should have been thinking maybe exit down here, especially when we started to overlap right in here and so forth. So if you weren't out right in here, you definitely should have exited on this failed break lower. And this was a great place to be thinking about buying, because remember, we bounced down here look how many times, so there's a lot of buy orders, resting buy orders sitting down here, and that's what we want to take advantage of. So when prices broke down here and failed, then we took the second entry long out of here, and it was an easy move back up to the high side. And at this point, you should have had your resistance line right here, and that's exactly where we went to. And then we had this nice inside bar here, and this was a great place to go short. It chopped around and even ticked higher once or twice there. So you could have got shaken out of this one. When I start to see overlap like this, I usually will exit with a tick or two, and that's what I did on this trade, because I really thought, hey, we had this failed break lower. There's a chance we could go higher. So I didn't get a full trade out of this one. I exited out, and then we came back down here to the bottom again. And there was actually another long right here at this point, but at this point I still wasn't sure if we weren't in this range, and we could have been coming back down here to test this line again. I really should have marked that one. I talked myself out of it and didn't take it, but that's really a good trade. That's a second entry long. It's off the strong support. It's a higher low than here, so that's definitely a nice long, and I don't know why I didn't mark it. I think I didn't mark it because I didn't take it, but that's a valid entry, and I should have taken it and just didn't, because this was a little confusing in here, and just like I said, I talked about over here, I got kind of sidetracked here and wasn't sure what was going on. So in that case, I just stay out, and that's what I did right here, even though that was a great entry. And you can see how bullish that move back up was. And actually, I do remember what had happened. We had a news event right here, and so I think that's why. I mean, the news event being over here is no reason really to stay out. So I don't know if that's why. I'm thinking I just was confused over here and lost and just stayed out. Because the news event was actually this one over here, and I ended up taking that one. So, but I didn't take this long right here because of the news event. That's what it was. This is where we had a news event, so I just stayed out until we got this double top and we're headed back down. And that's generally what will happen with the news. Let me show you that real quick. Is prices will rocket in one direction, and then quickly, sometime within the next 10 minutes to an hour, they will trade right back to where they started from. In other words, usually these news events are all emotional, and it's like a restart or something, and prices will work their way back and start over in that same general area. So this was the news area, and that's why I didn't take that long or mark that long right there, because it was going into news, and prices could have easily shot lower. And you never know with the news, if it's really the wrong kind of news, prices they don't always come back like that, but generally you can count on prices doing kind of a retrace and starting over wherever the news happened. And so that's what that was right there. This trade I simply didn't take. You should have went long right there. Then there was a short right here. Again, we're coming back up here to test the highs. We got a little overlap right in here. We broke higher, failed, and turned down, and We didn't go much further because we ended up having a failed break, but it was enough to get your scalp. And it really is almost a repeat trade of this. We just didn't go as far, but there was enough room to easily scalp out there. And when you've got strong resistance like that, especially when you're getting this close to this trend line, because this trend line really could have looked something like that. And I'm guessing that some people drew it like that because that's why you see those stems up there. But I believe it was like that right there. And part of the reason was because I went down here and I drew these two lines just like so right across here until I met, and then I just drug that up, and when you do it fits right in there. So I felt like that's, and generally that's what I look for. I try to find the first, if there's two bars like this with the stem, I'll try to touch one and go through the other one. And but you never know if it's going to be like that or if even that's going to be the trend line. But you can see that's not steep enough. Your best trends are generally a 45-degree angle, maybe a little less, a little steeper or a little less, but generally your trends are not that flat. If they are, they're not really a good trend anyway, so you could be thinking about something different. But anyway, we had a failed break above the trend line right here, a failed break above all these highs. You know there's a lot of resting sell orders right in here. Simply because prices have been building here and we're in this range, but it's always best to wait when you break above on the failed break, just like down here, unless you get a really great move up and then a strong reversal. It's better to wait on a second entry. So you notice that I waited on the second entry on both of these moves, and then this one we actually didn't get a runner here. Unfortunately, prices pulled back. But there was another entry here if you wanted to take it. It was a second, not a second entry short, but a breakout pullback short. And we came back and looked how we came back and tested the previous breakout area to the tick and then turned back down. So you could have gone short again here, but this was definitely a short, and this was a possible short. There's still a lot of overlap here, and there's always a possibility too. You should have had this line on here that we had a trend line coming up through here. And we did actually, and we broke below it and came back and tested it, but we also came back and tested this line again, and it held, and then it was off to the races lower again. So unless you re-entered here, you probably did not have a runner. And then by this time you really should be thinking range day, and so you should be thinking maybe I should fade every new high and every new low, and this was a new low, and if you'd have faded that, it was good for a scalp. If you'd have faded this one, it was good for a scalp. But I didn't mark them because I was thinking that hey, now it's really looking like we're in this trend channel, and you could easily get two legs down. But this is generally a good setup. When you start to get overlap this far away from the EMA, but we've had some pretty good moves lately, and somebody actually asked me about that today. They asked the question. Sometimes prices don't make it back to the EMA when we're looking for trades off the EMA, and that's true. But generally, on most average days, a pullback is going to make it back to the EMA. Now, occasionally on strong trend days, and when the market is emotional and doing funny things like it has the last few days, last week and into this week, yeah, you'll get some days where it doesn't get back to the EMA. And how do you know that the prices, if you're entering early or not? And you don't. You just have to kind of look for the setups. And there really was a short right here. If you notice, here's your new low, your pullback, your first entry short, your next leg up, and then you had this little double top, a failed break above, and then another turn down, and it's a second entry. So that's a valid entry. It's not as high probability as if it's over here at or just above the EMA during the pullback, but it's still a valid entry, and you see it would have worked for a scalp. You wouldn't have got anything extra out of that, but it was good for a scalp. But it's not a high probability entry that occurred at a key entry point, so that's why I did not mark it. Now this one is a second entry at the key entry, at a couple of key entry points. Actually, it's a two-legged pullback to the EMA. You even could have had somewhat of a trend line down through here, so it's the first break of that trend line, but it's a second entry short, and there's also a pullback to test the breakout area. So there's a lot of reasons to be thinking short right here. And again, it was good for a scalp and nothing more, and then we were headed higher again. So, but you could have expected that to be a possibility because we had all this strong support that's really way down here now. And so this is just another failed break lower. And there was actually a long here, but this was kind of risky because there's just, by this time this is really a little small trading range. It's a failed break higher, and so you figure you're going to come back down and test the low. Of course, we only tested these little lows, and I'm surprised we didn't test these. But this support, people saw the support, and they were thinking trading range day, and they were looking to ride prices back up. And you see we got close, but we just didn't quite get there. And then you got a second entry short right here at this downsloping trend line. And we got a double top, a second entry short, a failed break out of this stuff here, a retest of this breakout area here that we never really retested very good, and then it's off to the races again. And by that time, it's too late in the day. There's some other entries in here, but look at the time. It's by the time these set up, it's 2:30, which you know, I don't like to take anything really after noon. Definitely not after. I don't like taking anything really after 2 o'clock, and definitely not after 2:30. That's the absolute cutoff time. And really, I try to stop trading after, you know, before lunchtime. After lunchtime, I don't like trading. And occasionally I'll trade up to about 2 o'clock, but definitely nothing ever after 2:30 because you just don't have time, and you never know when you're going to go into something like this. And once the market gets choppy, it can do anything. Even though the trend was down and we could have continued to chop down, we could have bounced back up in here, and then as soon as the market opened, and then it shot down. So it's not worth the risk. So be very leery about trading after certain times. And one of my rules is absolutely don't trade after 2:30, and it's better not to trade after about 2 o'clock. And I don't even like trading in the afternoon. And the reason I say that is because there are some great trades that set up in the afternoon. And this was a pretty good trade right here. And if you weren't trading, you would have missed that. But the reason I don't like trading late in the afternoon is because if you make a mistake, you don't have time to make it up. And I can't tell you how many times I had met my goal in the past, and I went ahead and took a trade in the afternoon, and I made a mistake, and I ended up giving back either a lot of my profit or maybe even all of it, and you just don't have time to recover from that. And if you take your first trade in the afternoon, or you didn't make any money in the early morning, and you're sitting at scratch or maybe down just a little bit, and you take another trade in the afternoon and you're wrong, then you end up losing for the day, and that's even worse. I don't like to end with a losing day. Now, granted, I have some losing trades during the day on occasion, but I usually make those up. So because I have time to do that the way I trade. But if you have a big loss, or you screw up and make a mental mistake in the afternoon, or you just read the price action wrong, then you don't have time to make it up, and you got to be out before the close, so you got to take a loss. So hopefully that makes sense to you. But I'm going to wrap it up today. This is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.